The strong US dollars and Chinese numbers. Over a decade, China has become Australia's largest trading partner. So, whenever China reports good numbers in GDP, PMI, or trade balance, AUD tends to go up in value. So, let's build a relationship based on this, what we have just said. So, here we have China reporting either good numbers or bad numbers. Then if the reported numbers are good, then AUDs tend to appreciate. Then if China is not gonna report, China is reporting bad numbers, then AUD is going to depreciate. So we have S1 S2 situation. How trading is done with this information? We cannot directly trade yuan and AUD pair, so we need to look for a pair that is available here. In normally we can find AUD USD pair in the currency market, on forex market. In other parts of the world, it will look the same, given no other floating news in this market. It gets strong against all other currencies at this time when this kind of reports comes. Choose a pair that is available to you. So now coming to the decision in two different situations, S1 and S2. In S1, time will be immediately after the report comes. You go long in AUD USD pair, currency pair, and risk will be 300 to 400 pips, and you can expect a return of 400 to 800 pips. Now coming back to the S2, time will be immediately after the report comes, and short the AUD USD pair, and risk will be same, 300 to 400 pips, and return will be 400 to 800 pips minimum. Dollar index and gold. This one is based on correlation. Correlation coefficient values lies between -1 and +1. Let's directly first interpret the values here. Correlation here in its name form can be said as a postulation pattern of price movement of two assets. Say correlation of +1 means positive correlation, both assets move in one direction, and correlation 0 means no correlation, so there is nothing to speak about. Then if the correlation coefficient value is -1, negative correlation, both moves in opposite directions to each other. Gold price and dollar index have a correlation value between -6 and to -8. This means that gold price and dollar index are in negative correlation, as value given is closer to -1. So this also means there is a probability of 60 to 80% that gold price will drop or rise according to the moment of rise or drop in the dollar index. So how the decision is taken here? Let's see. If the dollar index is in uptrend, you can short the gold. If the dollar index is in downtrend, you can go long in gold futures. In opposite way, we can also say that you can whenever the gold increases, you have to short dollar index, and whenever you have gold is in downtrend, you can go long in dollar index. So the instrument to trade is here is gold spot or gold futures. In S1, the given situation in S1, short gold as soon as you find out the gold index is in uptrend. Stop loss should be 5% of your position. Target should be 8%, 12% generally on a normal day. And it should be based on the derivative, not based on the capital invested. And S2 will be long. Go long whenever there is a drop in dollar index, and stop loss the same, the 5%, and the target should be 5% to 9%. Now let's look at oil price, CAD, and JPY. That is Canadian loonie and Japanese yen. Canada is a major oil exporting company, while Japan is a net importer. Hence, oil price seems to show positive and negative correlation to currencies of both of these countries. So put it simple, if oil price goes up, the Canadian dollar increases, Japanese yen depreciates. If the oil price is coming down, then Canadian dollar will be depreciating and Japanese yen will be appreciating. So if we are seeing a major trend in oil price, we can take decision in these currency pairs according to the change in the trend. It is a pair. If the pair Canadian CAD and JPY is available, it'd be better. But if you can place trades in these currencies with other pairs as well, like Canadian dollars and USD. But just make sure that there is no other floating news around in the market with the other currencies. But if your broker offers Canadian dollars and JPY pair, use that to take positions. Decisions are like as follows: like if the oil price is going up, go long in Canadian dollars and short in Japanese yen. If the oil price is going down, go short in Canadian dollars and go long in Japanese yen.